Hello and welcome to the latest edition in our series FTT Chats. My name's Charlie Onions, Product and Content Associate at VC Innovations, and I'm delighted to welcome today Gerald Chappell. He is co-founder and CEO at Abound. Lovely to have you here, Gerald.
Great to be here.
Brilliant. Now, I think we could start off just with a little bit of a kind of an explainer. So if you want to tell us a bit about Abound and how, as a lender, you've been kind of approaching the bane of all borrowers right now, which is obviously the cost of living crisis.
Yeah, absolutely. And the cost of living crisis is difficult for everyone right now. So Abound is a UK consumer lender. We were founded in 2020, and really the mission was to be able to expand access to affordable credit. And the way that we do that is, instead of just looking at credit scores, we look at the whole person. So we ask our customers to connect their bank transaction data to our platform. And we use that to do a bit of a financial x-ray of people to really understand their affordability. And by using data and technology better, we're able to offer much better rates to customers and much better services as well. And so if you look at the cost of living crisis, what's going on at the moment is you're seeing a lot of uncertainty from traditional banks and traditional lenders because they don't really know what people's financial situation is like. And so your traditional lender effectively relies on statistical averages, so things like how much someone living in a certain area of the country spends. And at the moment, because you have such a rapid rise in costs, those estimates are becoming less and less reliable. And while they may be right kind of directionally on average, they're wrong in every individual case. And so traditional lenders know this, and they're pulling back from the market, which means they're kind of giving less loans and they're tightening credit criteria. And that's really bad, because credit is really important for the economy, and it's particularly important in a kind of cost of living type scenario. So credit makes a lot of the big moments in life possible, like buying a car, renovating your house, financing a wedding, that kind of thing. And if in the current environment, it's harder and harder to get access to that kind of finance. And so I think that's one of the things that Abound really can do to help. We were actually founded right at the beginning of the pandemic, and so this sort of understanding uncertainty is kind of really critical for us. And because we kind of use bank transaction data, open banking, to take these financial x-rays of people's situation, we're able to understand much better their affordability, and therefore we're able to continue lending with confidence through the cost of living crisis. So for us, the cost of living crisis, while obviously very difficult, is something that we feel that we can offer a little bit of help to, because we can keep kind of credit available, and we can do that at low costs.
So that kind of understanding crisis is already kind of baked in because of when Abound started. So I think that's great that you can apply that to the new crisis. So as a fintech, leveraging open banking, as you say, what would you say to those skeptics out there, whether it be consumer skeptics or just people within the industry that might be a bit more skeptical about open banking's impact on the modern lending process?
Yeah, I mean, let's break it into two. So let's talk about consumers first, and then let's talk about the rest of the industry and how they use open banking. So if we start with consumers, when we launched the Abound, a lot of people said to us, well, consumers just won't want to share their bank transaction data with a lender, and you guys will have no customers. And we were pretty skeptical about that, because we knew that there was a big demand in the industry to be able to go beyond traditional credit scoring. So a lot of consumers just feel like they were presented with unfair options from existing lenders. And they were looking for a way that they say, well, actually, I've got a good financial situation. Just look at me and understand me as a person, rather than looking at me as the number of the credit score. And what we found is, if you're able to position the value proposition well, so if you're able to explain, by sharing your financial data with us, we're able to evaluate you as a whole and give you better options as a result. People say, okay, I understand that, and that sounds reasonable. And so where we are at the moment is we have about 8 of 10 customers who come through who are willing to share that transaction data. And so 8 out of 10, I think, given the early stage we are in the kind of the adoption of open banking, is pretty encouraging. And it certainly works very well for us as a business, and obviously works great for those customers who are sort of willing to share that data. So I'm pretty bullish, if you like, on consumer adoption. When we go on to the kind of the rest of the industry, so the rest of the industry, the lending industry, if you like, has been very slow to adopt open banking or the use of bank transaction data, and there are a lot of reasons for that. And I would probably bucket it into 3 big categories: being sleepy, having fears about conversion, Perhaps not wanting to know some of what's in the data. And so let's go through each of those one by one. So in terms of being sleepy, for a lot of the large financial institutions, it's just very, very difficult to innovate and fundamentally change a core product proposition that you've got. So credit decisioning has a lot of policy around it, a lot of regulation, and a lot of business, frankly. There's just a lot of people that are involved in running things the way they are now. And to say, well, actually, I'm going to do a fundamentally different way to assessing the credit quality of a customer and making credit decisions, it's just quite difficult to put that into a large bank, which is really like a super tanker and quite hard to kind of turn and shift around. So I think from that perspective, it will come, but it's a many-year cycle for those institutions to kind of adopt and change. Then if you look at the sort of middle category, which is around fear of conversion, this comes back to what I was talking about at the beginning of people saying to us, customers won't want to share their transaction data with you. And so a lot of lenders, I think, fear that if they were to introduce bank transaction data, so asking customers to share that as part of their customer journeys, they would end up with a lot of drop-off in the process and their conversion rates would go down and they would issue less loans. I don't think that's a problem, and I think that's becoming less and less of a problem every day as sort of consumer willingness and understanding that sharing this data is safe and there's good benefits from it come through, and as the lenders get better at thinking about how to present that value proposition to customers. So what are you going to get in exchange for sharing your data with me? I'm going to be able to offer you, a higher acceptance rate, and I'm going to be able to offer you lower rates. And then I think the final category, which is really the least defensible, is saying, well, actually, I don't want to know what's in that transaction data, because there are some things in there that will mean that lenders can't lend to some of their existing customers. So, for example, and the most typical one of this would be people who have problem gambling spending. So, customers who may be spending their entire monthly paycheck on transfers to gambling firms. And actually, we see coming through our application data, probably over 1 in 10 customers, just around about 1 in 10 customers, actually do have problem gambling spending. And really, it's not responsible to lend in those kind of situations, because actually you're just providing more funding to what is already a difficult situation for those customers, and they're going to end up in a worse financial situation as a consequence. So for me, I think that's a really indefensible thing to be looking at. And I think it's also self-defeating from the point of view of the lenders as well, because what we find is actually there's a huge swap set. For every one customer that we're unable to lend to because they have sort of financial vulnerabilities and so on that you wouldn't have seen if you didn't have the bank transaction data, there are 6 other customers that you wouldn't have been able to lend to if you just relied on traditional credit metrics, because they might have a thin file or kind of some disruption in their credit history historically. But actually, if you look at their finances, they've got good income, solid affordability, good financial management, and you're able to lend safely and responsibly.
I'm sure you could talk much longer on open banking, which
Apologies,
is
ideal.
No, not at all. No, I mean it's ideal, as you'll be joining us at FTT Lending alongside Metro Bank, Salad Money, and MyTech to talk on the pros and cons of open banking and the adoption. Yeah, it's going to be great. So kind of bouncing off of that, and those players that you'll be alongside there on stage. How important is partnership when it comes to ensuring a responsible consumer lending, or just lending in general, and improving national financial health? How important is partnership to you? Is the FinTech Pledge, something like the FinTech Pledge, enough, or is there more that can be done, in your opinion?
I mean, I think partnership is huge. I think there's a lot of sort of new ways of using data that can result in much better outcomes for customers. We're obviously pioneering one of those ourselves. And I think as you kind of crack those things, and then you can share them with others in the ecosystem, both other fintechs as well as the larger financial institutions, then the results are just better choice and better outcomes for customers. It also helps the kind of the fintechs themselves to develop and grow faster as well. So I think the opportunity there is huge. Mm-hmm. We have a kind of software as a service part to our business as well. Mm-hmm. So the lending technology that we sort of built and proven by lending through to customers as Abound, mm-hmm. we also make available to others to sort of purchase and use through a proposition that we call Render. Mm-hmm. And so that is something that we do both with large financial institutions as well as fintechs. And I think that kind of thing, that kind of collaboration model with others, for me is a kind of really exciting thing about being in fintech. Mm-hmm. I think if I were talking to other fintechs about that, I would say you want to kind of be kind of diversified in terms of how you approach it. I think my experience, even with things like the fintech pledge, is dealing with large financial institutions like big high street banks and so on. They're very supportive, but it's very, very slow. And so the kind of the amount of time it takes to get something live with large institutions is long, and a lot of resources need to go into that. And as a smaller company, you can kind of get sucked into that process. So I think it's important to do those things, but also probably look at some of the collaboration across your kind of fintech peers that you can do as well to kind of have a diversified portfolio for that kind of thing.
Yeah, so collaboration is key, and I think that is a really positive way to end this edition of FTT Chats. Thank you so much, Gerald, for coming along. Really lovely to talk to you. Thank you everyone for watching. You can catch Gerald live on stage at FTT Lending 3.0 on the 29th of March at Convene London. And we'll love to see you all there. Thank you.
Looking forward to it.